Welcome back, everyone. Today we're diving into a topic where politics and economics meet: the trade relationship between Israel and the United States. Where does it stand right now, and what direction is it heading over the next few years? If you follow global business, investing, or geopolitics, this is a video you don't want to miss. Hook statistic. Here's the big number. In 2024, U.S.-Israel trade in goods and services reached about $55 billion, up roughly 9% from the year before. That makes Israel one of America's significant trade partners in the Middle East background. Historically, Israel and the U.S. have been close allies, not only militarily but also in commerce, research, and foreign direct investment. Their partnership is anchored in the 1985 Free Trade Agreement, America's very first FTA with any country. But fast forward to 2025, both governments are now discussing ways to modernize that deal, especially to include digital trade and data sharing rules that didn't exist 4 decades ago, recent tensions, tariffs, and negotiations. Despite the long-standing alliance, 2025 has brought some turbulence. The current U.S. administration announced new tariff measures that also touched certain Israeli exports. While not catastrophic, these levies raised uncertainty for Israeli businesses shipping goods into the American market. In response, Israeli officials are lobbying Washington to ease or adjust these rules, while also accelerating talks on updating the trade framework. The short-term outlook is therefore mixed. Strong ties, but policy headwinds. Energy factor. Another piece of the puzzle is energy. Israel's offshore natural gas fields, Leviathan and Karish, have become major export hubs, sending gas to neighbors like Egypt and Jordan. In mid-2025, however, security concerns forced temporary shutdowns of these rigs. Exports could only resume after military authorities gave the all-clear. That highlights a key vulnerability. Energy trade can generate billions, but it is highly exposed to regional security risks. Foreign investment in tech. On the positive side, U.S. foreign direct investment in Israel remains very strong. American capital supports Israeli startups in sectors like cybersecurity, AI, and biotechnology. This deep integration between Silicon Valley and the Tel Aviv tech scene means that, even if tariffs create friction, the long-term innovation partnership is unlikely to weaken future scenarios. So what comes next? Let's look at 3 realistic scenarios for the next 1 to 3 years. Base case, the most likely. Trade continues at a steady pace. Tech, defense, and services drive the relationship. Some sectors may face tariff pressures, but the alliance remains functional. Upside scenario. If the trade agreement is successfully upgraded, adding digital and data economy clauses, tech exports and services could expand rapidly. And if gas exports stay stable, revenues for both partners climb higher. Downside scenario. If tariffs escalate further or a major political rift emerges, Israeli exports could take a hit, investor sentiment might cool, and sensitive sectors like agriculture, diamonds, and medical devices could suffer short-term losses. Sector breakdown, breaking it down sector by sector. Technology and cybersecurity. Strong growth potential, provided data and intellectual property protections are updated. Defense and dual-use technology, steady, underpinned by security cooperation. Energy and natural gas, high upside but vulnerable to disruptions. Agriculture and consumer goods, relatively small but sensitive to tariff changes. Implications for businesses and investors. So what should businesses and investors take away? 3 things. Diversify markets. Israeli exporters should look beyond the U.S. to Europe and Asia as insurance against tariff risk. Prepare for digital compliance. If the FTA upgrade happens, new data protection and e-commerce rules will become critical. watch security, and energy developments. Any interruption in gas exports can ripple through trade balances and currency flows, so staying alert to the regional situation is key. Conclusion. To wrap it up, the US-Israel trade relationship is robust but sensitive. Tech and foreign investment keep the partnership strong in the long run, but tariffs and security challenges inject volatility in the short run. For policymakers, investors, and entrepreneurs, the message is clear. Opportunity exists, but you need to manage the risks. If you found this breakdown useful, drop a comment below. And if you'd like me to share a free PDF summary with stats and sources, just write PDF, please. Don't forget to like, share, and subscribe for more global trade insights. Thanks for watching, and I'll see you in the next one.